Following a year of unprecedented cat losses in 2011, many insurance companies are posting first quarter results. What drivers of P&L should we be watching out for?
It's certainly a welcome relief as we look at the first quarter 2012 results compared to the first quarter 2011. The results are better, and in general, insurers around the world have exceeded expectations, actually, even given the widespread knowledge that catastrophe losses were substantially lower this year compared to 2011. Looking forward, there are a number of drivers. Of course, we're always concerned about some kind of catastrophe loss that could emerge. The hurricane season in the United States starts June 1. There, the predictions are for a lower than average catastrophe losses in terms of hurricanes. However, I think across the globe, the main concern among property casualty insurers is the continued low interest rate structure that we see across Western Europe, in the U.S., Japan, the major insuring economies of the world. And this creates a driver whereby there's a drag on earnings from lower investment income, and ultimately this has to be made up for in some other kind of a way. And the way that that ROEs need to be kept up is going to be through tougher underwriting, and generally that means higher prices. And while there's some of that going on, particularly here in the United States and in the reinsurance world, it's not always the case everywhere. The urgency that we see with respect to pricing that translates through the lower investment income has yet to be reflected in pricing in the marketplace.
The U.S. Affordable Care Act is now in the hands of the Supreme Court. What happens if they deem that law unconstitutional?
Yes, the Affordable Care Act, also known as Obamacare, and this is a heated political issue, but even before we get into the meaty part of the election here in the United States, the Supreme Court is going to answer a lot of questions, and the Supreme Court is a real wild card here. It could do anything from nothing to strike down effectively the whole law to simply declaring some parts of it, including the specific individual mandate to buy insurance, and declare that unconstitutional. And the most likely scenario is perhaps that the Supreme Court actually strikes down the individual mandate, citing its unconstitutionality. That leaves a couple of options. The question then is the rest of the act actually viable without the individual mandate? There are some states that have said they will continue to go ahead with their own type of health care insurance program. The exchanges that have been set up may actually continue to operate in a couple of states. We could wind up with what effectively amounts to a mishmash of different types of approaches to health care reform in the United States, ironically potentially being led by the states, although only some states. So I think we'll have much greater clarity on this by the end of June, by which point the Supreme Court will have ruled.
What key issues should the industry really be looking out for over the coming months?
Well, over the next couple of months, I think that insurers, aside from the traditional sorts of concerns about catastrophe losses, are going to be looking for volatility in the financial markets, which is kind of a contagion type effect coming over from Europe. Will the gains made in the U.S. stock markets be washed away as a result of the uncertainty in Europe, as a result of the potential greater certainty of more stringent regulation on banks in the wake of the J.P. Morgan loss? So I think that this summer is going to be the summer of regulation. There are lots of clouds gathering on the horizon that need to be cleared away by the White House, by the SEC, by the Congress, by the Supreme Court, and then hopefully we'll have a little bit of clarity by the end of the summer. So by the time we get into the third quarter of the year, we'll have a little bit better sense of where we're going to wind up in 2013, but then the markets will begin to focus on the uncertainty associated with future tax rates, and we're looking at what would be a very large tax hike in the United States under current law unless Congress acts.
Thank you so much for joining us, Dr. Hartwig. Always informative.
Thank you. Glad to be here.
Hope to see you again soon.